Hi, 13th of April here. Just a quick update on how I look at NakedDelta data to decide whether a position is a long-term position or it is a short-term swing, and then you can position within that to hedge if you want. You can own the underlying rather than short-term call positions. And then you can use that compounding effect that we all need to use in our investments and in our 401k retirements and superannuation accounts. So here I'm just looking at coin as a instance of how I use the data, and there's obviously some confusing data. I've got liquidity indicators here using some different data points on a trading view chart, and we can see that here green is buying and means it's tight, that people are really chasing, buying the market, and red is loose and people are selling the market. And those things sometimes look a little bit confusing. They're not if you look at them in different time periods, but yes, they can to the untrained eye not look as good. So here we can see that we had a big bottoming, a big tight market on the 31st, and this is a false bottom. So how can I tell it's a false bottom? Well, if I go to Coinbase itself and I have a look, we have another set of indicators here, and this set of indicators are based around option data and how it interplays with itself to give us a buy signal, and we call it the ND, or NakedDelta Buy signal. And over a period of time, these different buy signals have different strengths, and we can see here as we came into March 25 we had a good buy signal, and we've had a good long. How do we pick that where a top is? Well, we could decide to go and have a look at an inverse to see where a top is, or again we could go and have a look at an inverse index product. But here, if we just use an inverse Bitcoin product here, so here we're looking at the 14th of January, we've got a buy signal here on the inverse Bitcoin, and let's just see if we've got an index inverse. Index. Sorry, just inverse indexes. So let's have a look what the inverse indexes. Sorry, inverse indexes are often hard to read because of the nature of they're constantly degrading. They're made up of options data, so they have to reform themselves. And so my open, high, low, close data makes them a little bit messy to read in the sense that they, at one stage, they're a $15 share and they've had a 4 times or 5 times reprice here, and rather than a split, it's times, and all of a sudden we've got an $80 share. We can see here on about the 2nd of December they started to see what they thought might be a bottoming, and it's quite a strong one. There's quite a few tickers in here, and again here on about the 22nd of January we see that there's a bottoming there in the market for the inverse, and it's gone through to quite recently, and we're starting to see a new bottoming, or a thinking of a new bottoming. So let's just have a look at how that goes. So that's about the 22nd. And we had another one on about the 5th of December. So if we went back and we had a look at coin quickly, if we have a look here, we've got about this 22nd, we see this false buy, and we're dropping into this period of a false buy, and we've had coin has dropped since then, along with the Bitcoin market. We could have a look at Bitcoin and see what it did, and Bitcoin too has had a buy. It's been at a different time. It was around the 19th of December. It's a slightly offset. A lot of the time it's laying off vol. So let's just have a look at what Bitcoin did during that period. So here we can see that there's several buys in the Bitcoin market, and there's a big one here, 15th, 16th, and then there's another big buy at the start of January, before actually we can see here that we've got a sell in the market. And then we've got down to a lower price level, and again we can see this buy happening about the 10th of April. If we look at the coin and the Bitcoin around that, we're getting a very big buy signal now, and that's in coin. And if we have a look at Bitcoin, there was a very big buy on the 25th of March, and again about the same as Bitcoin on the 7th of April. Coin's very interesting just of how uniform it is. We can see some bigger buy signals here. This is a very strong buy signal on 20th of March. We've had another quite strong buy signal on the 9th of September. Had a good buy signal there on the 19th of Jan, but a lot of them can be outsized. So here we go. We have a very outsized buy signal on the 25th of September 23, and we've seen a very large price gain since then. And if we rolled out of that and we didn't have that as the big buy signal, we could see there was one in August, and there was a couple here through these bottoms here. Here was a strong bottom. They don't necessarily always suggest a market that's always going to rise, but they will give you a good idea that you're in a sideways market. And you probably have to look at the invoice and the inverse, and you have to do some of your own management. This was a very difficult period in 23, where we were coming off the 22 market, where we had rates going up, and that was very destructive. It didn't really kill the price too much. It sat around the 60 mark, but it really didn't take off here until September 23, and then we saw this huge rise as prices got as the market revalued because of cheap money. And so we had cheap money, and it's really ridden through from that period. We've had cheap money going, and now it's just really tightened up again, and it's dropped, and we've seen another buy here just around September 24, when we had the election of the Republican Party, and we've had some gaining in that. And so these buy signals here, although there might be a series of buy signals coming down to a bottom, what it's actually suggesting is it's giving us an idea that there's a big swing in the markets. And so we can see here, if we're looking closer, what's happened in the market to create such a swing. We've had a very large increase of open interest here in long positions, and we've had a big decrease in short positions. Now, that hasn't happened overnight, and so it's taken a period of time. If we go to this current, it's taken a period of time for that to bottom, but now we can see it's really starting to crank up, and we're seeing a lot more long positions, even though they're jumping around, than we do short positions. And so Coin is telling us that we're at a major bottom at the moment. There is a little bit of a warning sign in the inverse here. The inverse of Bitcoin, if I just put it in here, is suggesting that we're climbing up towards a new possible bottom, at least a short-term bottom for the Bitcoin universe. So the inverse of it, so it's a short-term top for Bitcoin. The inverse is showing us that it's starting to bottom, and you can see that these bottoms take a little while to form, but it's quite a steep bottom. And what that would suggest to me when I look at the date is that we're almost to the third Friday for the month, and when we get to the third Friday, IV starts to rise. We see some selling here. We can see some selling. This is DPI up here, dark pool index. We can see some selling. And the reason that we are seeing that selling of the underlying is that hedge funds and their market makers are repositioning. This particularly here was to do with the drop in the inverse, so that the hedging has pulled it back down. But we might see this bounce out of the market, or we might see it go sideways. It doesn't necessarily. You can see we've had a lot of sideways here in buy signals. Be very interesting to watch the individual pricing. And so you'd have to go and look at something like Coin, and Coin would show that to you. If we looked at something quickly, if we looked at those inverse and we looked at where their positioning was, we can see that their positioning, I'll just put a filter onto it, their positioning changed substantially. Red is puts, green is calls. We can see we've gone from a strong position for a short time, and we're going back into a hedge position, and there was only a little dip in between. If we actually look at the pricing, we can see these dips as this hedging has taken place. Anyway, that's how I use the two groups of data. We are just about to upgrade our systems. We're using AI to crunch it and look more at motifs of what the different things do, and we will be giving a daily signal whether the day has a lean towards a long day or a short day, and then you can body that within your positioning if you need to be repositioning, moving call positions around an underlying. Anyway, I hope you have a great day's trading tomorrow, the 14th of April, and a good end to this OPEX period. Cheers. Thanks for listening.